Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode. Joining me from across the pond, as we like to say, over there in the UK, we have Artur. You can find him on Twitter at MoneyHacks16. And I'm just going to throw it over to you to give yourself an introduction.
Yes, morning, Dave. Morning to you. I'm obviously past lunchtime here in the UK, so I'm Artur. Really excited to join you. Thank you for the invite. So, just a bit, I guess, about me. Moved to the UK 13 years ago in 2010. Came to study finance and was planning to move on, but then, you settle somewhere, and it's hard to move on. I come from a really as normal of a family as you can imagine. So my parents were doing an amazing job at making the ends meet. And
Right.
I guess that's where all of the passion I have for money and sharing it with others kind of comes from. So yeah, I've started the blog fairly recently and joined the Twitter community as well. So I'm trying to bring some value there and share my knowledge and stuff. So I'm really excited to have an opportunity to join you here and just have a chat with you about different investing opportunities and whatnot.
Nice. Awesome. Yeah. And so before we started recording, you mentioned that you moved from Latvia. So for those following me on Twitter, know I've been playing a geography game. I'll point to Latvia later on, and we'll see how many people can find that one.
I'll make sure to not give the answer away straight in the comments there.
Yeah, exactly. I guess that maybe we just gave the answer away saying it's Latvia.
Well, we'll see how many of your followers are actually
I'll do
checking
some
the
trick
blog
ones first,
straight
like a
away.
few around the area maybe, and then try not to make it too easy.
Exactly. Good plan. I love it.
So yeah, you moved to the UK 2010, 13 years ago. You studied and then obviously kind of got into sort of that young adult and career uh, phase of your life. And then somewhere in there, you discovered investing, obviously, or you were there
Yes.
before that. I guess just
No,
maybe take
no.
us through how you got started in investing in the first place.
Yeah. So I guess as you rightly say, after finishing my university, I've started my career, and my first thing, kind of vaguely linked to investing, was to kind of make sure I can buy my own place. So that was always a goal of my own because I didn't really want to waste money on renting. And then as kind of time progressed, I've realized that investing is probably something to worth exploring. And after reading a couple of books, I kind of found some opportunities in the UK. We have a really generous tax-free investment scheme where you can invest up to £20,000 a year, which is tax-free for life, which I've kind of decided to try to maximize as soon as I really could. So trying to contribute into it frequently and kind of drip the money in, so to grow my my portfolio over time. And I was one of those who started my proper investing journey. I think it was like 4 months before COVID hit. So it was 2019, I think. And yeah, it was the first really good test for my nerves and how will I cope with like a massive loss of value pretty much overnight. And it was good because obviously in the beginning my portfolio wasn't anything big. But seeing, I don't know, -10, -20, -30% literally within a week,
You
it
start
was
getting nervous
scary.
right away. What have I done?
Exactly. And I was thinking like, oh my God, I didn't put much, but everything I've put is gone. But then, yeah, I quickly realized that with all of these dips in the market, there's actually a lot more opportunities that come. So being prepared and kind of holding your nerve and just investing in the right time can really change your future big time.
Just a quick, I guess, question. You said 20,000 pounds, and obviously the majority of my viewers and listeners are here in North America. So 20,000 quid is that a roughly 40,000 US dollars, give or take?
I'd say it's probably around 25 at the minute.
Oh, okay. I didn't realize that it was.
Yeah, so I think the exchange rate is
I haven't
currently
looked at an exchange rate between like US and the pound, or Canada and the pound, in a really long time. So my number was way off, obviously. Or actually, maybe I was even thinking about like comparing it to a euro. I don't know. Anyways,
Could be. I'm not sure. I think it's around 1.3 at the minute, so maybe I'm just a bit off with like 26, 27,000.
yeah. So
But it's
probably
still
then,
a decent chunk.
yeah. So let's say 25 to 26,000 US, which would be roughly somewhere in the range of 30,000 Canadian dollars.
Yeah,
Obviously, just
so
really rough numbers.
it's yeah, it's as you can imagine, it's not a bad number to invest if you're able
That's a
to put that
significant
far.
amount, right? When you can do it yearly, I mean, if you can find that amount of capital every year, because obviously there's still bills to pay and everything, right? And you got to put
Yeah,
food on the
exactly.
table.
But if for those who are able to kind of get anywhere near the max, you can imagine that the compounding over time can really make a big difference. So
Well, in
even
5 years, you've got 100K, right?
well, exactly. But if you put some growth on top of that or some dividends, then you're really laughing there.
Yeah, that
And I think that
snowball is growing quickly at that point, right?
exactly. I was just getting to that first six-digit figure, which is the hardest, as they say, and it is true. And
Right.
then you can see the numbers coming in while you're sleeping.
Yeah, which is nice, right? It's nothing I love more than waking up to a notification on my phone that says you received a dividend,
Yeah, exactly.
and it really
Same.
doesn't matter if the dividend says it's 10 cents or $10 or $100. It's like it feels this pretty much the same every time. It's like awesome money
Exactly.
that I didn't work for.
Exactly. So it's yeah, I think especially early in your investing career, the minute you start realizing it and you start investing it back, I think a lot of platforms currently offer like fractional shares and stuff.
Yep.
The minute you start realizing the value of it and the power, you can really make a difference to your future self, literally in 10, 15 years.
Okay, before we dive into some of the different companies and different sectors, because obviously it's going to be different over there in the UK, I do want to give a quick shout out to Buy Investing Shirts. You guys know, use code word Posse. What would you call this? I love this question.
I'd maybe call it a beanie or something.
Yeah.
I'm not really sure it's a UK term, but yeah, that would be my guess.
I'm pretty sure everyone else in the world calls it a beanie. We call it a toque here in Canada simply because there's a number of French words that have kind of just integrated into English. I don't know how or why. Well, I know how, like just the French influence of Canadian history, right? So that just happens to be one of them. Then, of course, there's the Passive Income Posse T-shirt. There's Patrick's got hoodies and coffee mugs and all sorts of great merchandise over there. So definitely check out Buy Investing Shirts. Link in the description below, and of course, use code word Posse for a 5% discount. Awesome. Yeah, let's get into talking about some of the different companies and different sectors. Is there any kind of one sector that you focus on in your portfolio, or
It kind of goes. I guess there isn't a necessarily one sector that I always kind of focus on, so it always will depend on what's happening out there. So
right?
lately, it's been a bit of banking. It's probably since really the COVID where I've seen that banking has dipped quite significantly, and in the UK, a lot of them even suspended their dividend payments for a while.
Oh,
So
really? Wow.
yeah, so I think there was it was a law in the UK where the government wanted to make sure that there's no banks that go bust during COVID when we were offered mortgage holidays and stuff like that. So they wanted to make sure that the whole kind of financial infrastructure in the UK doesn't collapse. So dividend got suspended for I think a year, and since then the prices of the shares really dipped. And currently, a lot of the UK listed banks, so the likes of Barclays, Lloyds, HSBCs, you can get dividend yields of circa 5%. So you'll probably know that 5% is not bad
Yeah,
paycheck to be
it's
getting.
good.
And there's been recently, obviously, the opportunity with the whole banking sector dipping because of the US regional banks as well.
Right.
So just last week, I think I've managed to kind of buy a bit of a dip in Barclays myself. So kind of building a position there.
Yeah, banking is generally a good sector. Definitely, the Canadian banks are strong. When you said the banks suspended their dividend even for a year, like for the Canadian banks, that's unheard of. I know most people have heard me refer to the settling nomads tweet from back in October that shows the consistency and longevity of the Canadian banks paying a dividend for over all of them over 150 years, and a couple of them coming close to a 200-year anniversary. So
Wow.
definitely unheard of. Like 200 years, that's longer than Canada's even been a country, right? So
Exactly. Yeah, well, it was a really big shock when this was announced, but kind of looking at it now, it does make sense because obviously the government had no idea what's going to happen. So
right,
making sure that there's no further financial impacts to the whole economy was the priority. And if we go back to like 2008 when the whole banking globally collapsed, you kind of want to try to protect, I guess, it as much as possible. So I kind of don't blame them. But now I think where the shares are in terms of their price, I think there is quite a lot of growth in banking to be seen in the UK, as well as do you expect with the current interest rates being so high, there is an opportunity for banks to kind of keep pushing their dividends up as well. So that will hopefully drive some value
right.
into the shares themselves. So a double whammy potential there.
Nice, nice. Anything else in the financial sector? Here in Canada, we kind of we have a few really good insurance companies as well that we sort of lump into. Well, they more or less are, right? The financial sector. So, we talk about the big 5 or 6 Canadian banks, and then lump in like Sun Life and Manulife and a couple other life insurance companies. So, is there anything? Are you just kind of in that financial sector? Are you just primarily focused on the banks, or is there anything else kind of that you would consider including in your financial sector part of your
Yeah,
portfolio?
so I do have a couple of other financial companies. So insurance is a big thing in the UK as well. There is a couple of companies. One of them that I have in my portfolio is Legal in General. They're like one of the biggest UK insurers. Currently, they pay a mega dividend, in my opinion. It's something like 7 or 8%. I don't remember, but I don't think that obviously that will stay at that level for too long. So for
Right,
those looking to kind of lock in their dividends, I think now is a really great opportunity because their shares, I reckon, will bounce back. So they have been impacted by this banking crisis as well, and the price has dipped, obviously driving the yield up. So now I'd say it's a good opportunity, but we've seen recently, I think around 3 4 months ago, one of the insurers slashed their dividend in half in the UK, which was a bit of a worry because we had a surprisingly cold winter, I believe, and a lot of pipes just started exploding all over the place. So their payouts on the insurance on those things went through the roof.
right.
Uh, so yeah, it's one of those where I think 8% realistically is not sustainable in the long term. Although their cover currently is in a decent place, so you either expect the price of the share to go up or them to review the actual payout and maybe reduce it somewhat.
Yeah, I definitely see that Legal in General tweeted a lot, like by yourself and others from the UK that I follow. It's definitely a popular one among the people in England and the United Kingdom that are on Twitter, or in my Twitter feed. Anyways, I see it a lot. So that definitely speaks to that. And you mentioned cold winter, and I'm just thinking, yeah, but you're from Latvia. You've got to know what a cold winter really is compared to what the weather is in
Yeah,
Britain.
yeah. The winter here wasn't that cold, but obviously the UK is a bit different in terms of what's cold here.
Yeah,
So I think that realistically the temperature was like -2, -4 degrees, which in
Celsius.
Latvia is probably midsummer. But yeah, the pipes started bursting because they just were not prepared, I guess, for it. And it's really interesting how the whole thing just started impacting the insurers big times.
Interesting. Yeah. Yeah, let's jump into another sector. Is there any sector you want to talk about next, or do you just want me to sort of jump around?
We can either go down your list, or I have a couple of holdings in rates or REITs. I
REITs,
believe
yeah.
you're a bit of a fan of these yourself.
I am, yeah. I definitely am a fan of REITs. It's a great way to invest in real estate without being a landlord. That's my personal take on it.
Yeah, I agree. I agree. You still get a decent dividend paid, but all the hassle of actually managing it and being woken up at midnight by your tenant calling that they lost their key, all of that is gone. While the actual payouts you get is still at reasonable. I think in the UK, a lot of REITs that we have are currently again like 4 to 6%. So a lot of decent companies, and it's just, in my personal view currently, you need to be careful with what types of REITs you expose yourself to. So there are some that focus their portfolio kind of on healthcare in the UK. So there's a company called Assura, whose predominant portfolio is kind of healthcare facilities. And I think that's like a really long-term play, because with our NHS, which is like the healthcare system in the UK, being under pressure so much, I think their income realistically is not going to go down anytime soon. Well, there was a bit of a boom in warehouse REITs during COVID, because there was obviously a lot of online businesses and things like that popping up. So many people were looking to either rent out the warehouses or maybe some smaller units. So a lot of those REITs kind of went up in price significantly, and I see them kind of reverting back to the mean at the minute. So it's something to be a bit careful. And I actually had one of the REITs playing in the shopping malls. They're called Hammerson. So I bought them just before COVID, and as you can imagine, that wasn't the best of the buys. So their shares, I think, when they split them 1 to 10 or something like that at the time. So I had to put quite a bit of cash into that in order to maintain my position. But luckily, I was able to exit them at a decent time when they kind of popped up a bit.
Right.
And actually managed to close at a profit. But looking at them now, again, they're below my buy price at the time. So not sure like retail is currently the right sector. But I think in REITs, if you find the right type of companies, maybe student accommodations or housing or healthcare, I think those are a no-brainer for me.
Yeah, I have a couple that are healthcare related as well, and they seem like a great long-term play. I've been a little bit killed in the office space REITs simply because there's so much more work from home these days. So that one's a tough sector. I am curious for your REITs in so every REIT that I have, and they're all Canadian REITs, they all are a monthly dividend payer. Do yours pay monthly or quarterly?
Most of them are quarterly, so some are even twice a year. So I don't think in the UK, well, at least not in my portfolio, that there's anything monthly. I have a feeling we have some monthly dividends as well, but the issue with those I see is that when you start breaking those 4 or 5% into monthly payments, they're not as exciting as getting a nicer lump once a quarter, you know.
Yeah, and I've made that point before too. Like 5% is 5%, whether it's paid monthly or quarterly. So, I just kind of there's that nice little psychological thing though, where a couple more bucks show up every say 30 days into your account, and it's just nice to see it. Um,
I agree. Can't blame you for that.
one more question before we move on from REITs. I'm just curious about the structure of REITs in the UK as well. Like here in Canada and pretty much and the US are very similar rules to the payout ratio of REITs being like 90 or 95% that they need to pay out of their profit. I believe
Yeah.
I'd have to go back and look. I've had other guests explain it to me better actually, but just kind of curious what the rules are for REITs in the UK if they're similar to the Canadian and US rules.
Yeah, so one of the things with REITs that makes them quite attractive, in my personal view, is obviously the tax system. So I believe they are excluded from tax in the UK whatsoever, which is obviously a nice place to be. The payout ratios, I believe, currently sit at 95%. So most of it has to kind of go out to the investors, which again is nice. And when you start comparing the benefits of REITs versus becoming a landlord yourself, there's pros and cons. I do think that if you do a successful investment in real estate yourself, you can probably beat the, let's say, 4 or 5% yield
Right.
annually. But there's always the one added risk of what happens if your tenants decide not to pay, and then obviously the headaches that come with refurbishments, just management, and the minute you start getting like estate agents involved in all of that jazz, your yields are really dipping quite a lot. So it's a tricky one, and I do understand why some people prefer going safe way of REITs and leaving it there.
Yeah, definitely. Yeah, I agree with you 100%. Like, I've had a few guests that have been quite successful investing in physical real estate, and great for them. Just personally for me, I prefer the no headaches of the REITs, right? Like,
Well, I have to say that I'm currently looking into potential of diversifying a bit of my portfolio into physical real estate. So I can't really say that I'm 100% REITs. I do think that having a bit of varied portfolio does help because, yeah, I've been speaking with some friends of mine who are kind of within property, and they had fairly positive experiences with their rental incomes even during the likes of COVID.
right,
So when a lot of people were saying that, there's a big risk of people not being able to pay their rents and things like that. If you get the right type of tenant, I think you can be fairly safe. Whereas, yeah, my experience in the UK, at least with the dividend stocks, they got slashed big times.
okay, great points on REITs. I want to talk about energy next because obviously, the last year and a half in Europe, energy has been quite
Pain
quite a
points?
topic in the news, basically. And they've even, well, here in North America, they've called it an energy crisis. Obviously, we're not there. We don't know. We can kind of only go by what we see in the news or what we read online, and then you'd have to try to filter out the truth from that these days, right? It's not like the old days where you could just rely on what the news was telling you to be true,
Yeah,
unfortunately.
100%. You can't.
But with that said, yeah, energy, obviously, BP is one of the biggest oil and gas producers in the world, and obviously a very strong company. I guess just sort of, yeah, let's unpack the whole energy thing and in relation to Europe and the UK.
Yeah, so your news didn't lie. There is the word energy crisis was circulated in media and on TV here like every single day. So all the prices on gas and fuel went through the roof. So governments had to even implement some price either barriers for companies to kind of the limits to how much they can put their prices up to the end consumer, or there was quite a lot of uh, kind of government funding to even individual households. So I believe in the UK we were getting something like £70 a month paid into our bank accounts just to help with the gas and electricity that became like super expensive here.
Right,
Um, Obviously, at the same time, all the big producers, the likes of BPs and Shells and all of those guys have posted the biggest profits on their record. I think it was like nearly double of what they previously were generating. So these guys are benefiting big times. And I did have some of the some shares in Shell, I believe, just prior to this. Um, but I have now exited that position, as I do think that there's quite a bit of uncertainty around the future of it. So shares nearly doubled from what they were, let's say 2020, 2021. So I thought that taking, I think it was 80% profit was not a bad idea. Now looking at it in hindsight, their dividends are absolutely massive. So maybe I pulled the plug a bit early. However, I do think that the oil and gas probably not going to stay at this level for too long. Obviously, a lot of producers of gas and oil, they do want these prices to stay at these levels, but I have a feeling the minute maybe the Ukraine thing starts kind of calming down, maybe that's when the prices might start coming down, which will impact both the yields and the share prices. So I've decided to do the safe thing and lock in the profit wells there.
right, yeah. So the last thing I want to do is turn this into any kind of geopolitical podcast, but obviously all the sanctions on against Russia right now are, yeah, we understand why they're there, but obviously Russia is one of the world's largest producers of oil and gas, and obviously they supply the majority of Europe. So suddenly with those sanctions, yeah, things. I can definitely understand how things became extremely difficult throughout Europe
Mm,
and of course the UK as well. Um,
yeah.
I guess before we move on from energy, sort of anything else there that you want to
No, I think
mention?
in the UK we're quite lucky with if you look at our biggest indexes, they are very rich in terms of like dividend companies, and energy is quite a big part of it. So for those kind of looking for decent yields and stuff, I would definitely not discard UK energy companies. There's a fair number of them, and a big chunk of them actually play globally as well, likes of Shell and BP's. So
Right.
for those looking for some healthy dividends, I would have a look into those for sure.
And I don't know for a fact. I know a lot of the energy companies here in North America are also investing in renewables in the solar and wind, and I'm guessing I'm sure that the companies over there are doing the same thing. So they're obviously thinking about the future as well.
Yeah, it's the same story here. So all the big players are looking to diversify their portfolios into renewables, and then there's quite a lot of energy companies that solely focus on renewables. So you get quite a lot of those popping up. Currently, they're probably in the secondary index, which is FTSE 250 or AIM. So you don't really get them on the in the top 100 companies yet, but there's a lot of companies focusing there and paying really nice dividends.
Okay, I'm going to move on to the telecom sector, telecommunications. We actually just had really big news here in Canada yesterday, where the Rogers and Shaw merger slash acquisition was finally approved and able to go through. So um, that's quite the story here for the telecoms. But I'm going to let you talk about some of the telecoms in the UK and if you invest in them or if you don't or whatever. What's your opinion on the telecommunication sector?
Yeah, it's an interesting one. Obviously, all the communications is a growing sector, and I think we have a couple of them in the UK. So Vodafone is one that springs to mind, and I did have a play in it a while back, but not for a while. The interesting thing about telecoms here, for some reason, the profits are not as steady as you'd expect them to be when you think that they are selling just the broadband and stuff. Uh, the phone lines. It's one of those segments where I'd expect the profits to kind of go up, but the performance hasn't been that for a while now. So
Well,
I
especially since that sector is now not just telecommunications, but it's, telecommunications and media. So they have, internet, cable, and other
yeah,
forms of communication, right?
all of that, and you would kind of expect that you invest into a cable once and you can take the profit off it for quite a while, but for some reason they're not really delivering the P&L results you'd expect, and for that reason I'm kind of a bit on the fence personally.
So you don't invest in any of them?
No, not at the minute. So the only probably exposure I have into these is through some of the index plays
Right.
that I'm holding, but that obviously is a smaller fraction.
Okay, fair enough, fair enough. I
What's
do
your
want to get
personal
in.
view on these?
Sorry, say again?
What's your personal view on these?
I hold Bell Canada, which is the biggest of all the big ones, and the primary reason that I chose Bell is I'm sure you've probably heard me say, "Turn that cash register around." I pay my cell phone bill to them, so I want them to pay me to pay them.
It's a good
And then with
strategy.
that said, I TELUS is definitely on my watch list as well. TELUS is an interesting company, and like I said, the Rogers and Shaw acquisition, there was actually kind of a neat little thing in there where in order for Rogers to acquire Shaw, Shaw had to sell Freedom Mobile, which was one of their like discount type carriers, to the fourth player, which is Quebecor or Videotron, which is obviously a Quebec company. But this Freedom Mobile is going to allow Quebecor to expand to almost the rest of Canada. So there's going to become sort of like a fourth player in the cell phone market. So it was just a very interesting deal in the way the regulations allowed them to do it. It's quite the interesting story to unpack, and that's definitely one to if anyone's interested, just look it up online and read some articles.
That's a good shout. I might do that myself.
Yeah. Okay, well, yeah, we can move on from the telecoms then if it's not really not in your wheelhouse or in your portfolio or of too much interest to you. So I guess let's just what's sort of a next big one for you?
And I do have a couple of plays in consumer goods. So in the UK here, again, we're quite fortunate that quite a few big staple companies are kind of listed here. So we have the likes of Diageo, Unilever, Reckitt. So those companies that you probably find products from these giants in every single household.
Right.
I believe the penetration in the UK is like 95%. So their products are everywhere, and obviously they're massive global players with presence everywhere. So it's kind of one of those that I think is a safe bet again. So I think they offer currently a bit less of a yield than some of the financial sectors. I'd say you're probably looking at around 3% yield annually, which is not a bad place in my view as well, because I think likes of Unilever and Reckitt historically offered a decent return on capital as well. So your share appreciation kind of adds up on top of the dividends you get. So I have some positions there, and with them it's a bit interesting. For the last 2 years, I've seen that the share price has kind of not really fluctuated much upwards, so kind of moved more sideways. So it's more of a dividend play now, and really looking for those opportunities to buy maybe when they dip somewhat.
Right.
Um, but yeah, the likes of Diageo's, we all have a bit of a sin.
Yes, yeah, that's actually Haley was explaining Diageo to me a bit, a producer of booze, basically liquor and whatever. So Unilever too is an interesting one. They definitely don't have the same market penetration here in North America as obviously they do in Europe, but they are still here, and odds are very good. Odds are very good. I could probably find a Unilever product somewhere in my house, or you know, I think just the big thing here is obviously they have very strong competition with Procter and Gamble. So I know there's a lot of Procter and Gamble products in my house without even having to look for them. I just know that they're there.
Yeah. And I think it's kind of regional thing. So I think in Europe they're fairly big, and they play obviously in different parts of the consumer. So they have obviously cleaning stuff, some consumable produce as well. So they do have a lot, and I think the fact that they're maybe not in US, it just gives them an opportunity in my head to
To
expand further.
expand and grow for sure. Well, like I said, they're definitely here. Like, actually, right now, I'm trying to think in the back of my head. I'm like, okay, later today when I go and do laundry, I'm actually going to go and look at the back of the laundry soap because it's 99%. It's going to say one or the other, Unilever or Procter and Gamble. I can pretty well guarantee you it's going to be one of the two, right?
Yeah, and that's the thing that I think these companies have such a vast portfolio that we actually don't even realize the products they own. So you start thinking of like the giants, like we unfortunately don't have them listed, but I think it's in the US stock market, the Mondelez, which is one of the biggest snacking companies who have the likes of Oreos and stuff. Those guys are absolutely massive. So yeah, you can't really go wrong with those type of companies in my head.
No, and I agree with you. Like, and they're recession proof too, to an extent. Like, people still need to buy soap. People still need to buy food. Maybe they don't. Maybe they'll cut back on the snacks or the booze, and some of those more discretionary spends. But the staples, people still need them. Whether it's a bear market, bull market, you
Yeah,
still need to, right? Like,
I agree, and I view it exactly the same way that a lot of these companies are probably a bit more boring. You're not going to really expect them to post a three times the profit next year. If you look across the history, I don't know, the last 5 to 10 years, you can probably even without any finance degree can predict roughly where the next P&L is going to be.
right.
But for those companies, you also know the brands. People will get them all the time, and it's a safe bet to be both growing your asset value as well as be getting some income on the side.
Anything else in sort of that consumer staples and discretionary? Like, Here in Canada, we have several large grocery stores listed, and then obviously in the US, you can buy Costco and Walmart as well. Do you have like grocery stores listed on the
Yeah, we
FTSE?
have some. We have some. So in the UK, we have like four big grocery chains, and I think three of them are listed on the market.
Would that be like Tesco would be one of them, I
Tesco,
think?
Morrison's, and Sainsbury's. So they're quite interesting as their prices kind of go up and down all the time, in my view. So I think what's currently happening with all the inflation, in my personal view, is not really going to help their P&Ls, and obviously that will be reflected in the dividends you can expect for these. Um, I know that a lot of companies are kind of pushing their cost prices up onto retailers, and then the retailers are still in a bit of a war between themselves on who can deliver the produce the cheapest. So I think that's where their margins might get squeezed quite a bit. So
Right.
while they are present on the market currently, I'm a bit uncertain that now is the right time to pull a trigger on them. So I kind of want to see what happens with the commodities in the near future before I actually add these to the list.
Yeah, my opinion on that is a little bit divided. Again, recession proof. People have to eat every day, no matter what. But yeah, I definitely agree with your thoughts on sort of that inflationary pressures, and we'll kind of see where that unfolds in the next, say, 6, 8 months to a next, the next year. Who knows?
Yeah,
Who knows?
it,
Like,
it it's an interesting one because I do agree that the volumes are going to be there and probably the turnover is fairly future and fluctuation proof because obviously, as you rightly say, no matter the inflation, I still want to eat.
yeah,
The problem is I'm not sure how big of a conversion from that turnover down to profit we're going to see. And with I don't really know how it works in Canada, but most of the retailers in the UK probably average 3 to 5% margin.
right.
So if you start thinking of a couple of percentage points being taken away by inflation, it is a massive chunk of their profit that can be wiped off their P&L in no time, really.
Yeah, yeah. I actually, yeah, I'm guessing it's probably around the same margin. However, just recently, so like I said, there's kind of three big uh, grocery store, but they have like subsidiary stores. So there's tons of different types of like the higher end grocery stores, the sort of the basics, and sort of obviously the price levels are different within those stores. And so the big three, the CEOs got called in front of Parliament because they were all like declaring record breaking profits, and the politicians are like, you know, every nobody can afford groceries, and you guys are making record breaking profits, and they basically all just testified saying nobody understands the way the grocery industry works, and that was literally their defense. So
Yeah,
nothing really came of that, but
I think
yeah.
I've heard
So
that in the news a month or so ago when they had to go into Parliament defend themselves, and I was quite surprised to hear that because in my head the inflation would kind of push their profits into a squeeze.
yeah, that's
But
what
obviously,
I thought, right? Shouldn't they be like struggling to stay alive, and but there they are right on the opposite end of that spectrum declaring record profits.
yeah. So I think by being clever and playing uh, your mix of products you're selling and probably focusing more on the products they make more margin, I guess that's the way they make profit. So one of the other thing that I would maybe consider within the retail, we have some discounter chains in the UK where it's basically the likes of your Tesco's and Walmart's where you go and do your shopping, but it's more of a cheaper end of the products or when companies are trying to clear their stocks. So those guys, I know during COVID posted like nearly 80% profit increases. So those are the types of retailers I would consider. And we do have one chain called Home Bargains um, or B&M. They might be on the stock market. So that's the one I have my eye on. They had a really attractive dip recently, price wise. However, I slightly missed it, and the price has jumped around 30% since. So I'm kind of a bit uncertain if the current levels are still attractive enough,
Right.
or I should potentially wait for another dip to happen.
Yeah, we have those same types of the discount retailers, and here they're called like No Frills and Food Basics. but they're still owned by those big three that I was just mentioning. So they're kind of part of the conglomerate, anyways. You are getting better prices at those like discount stores. So obviously, like you said, a lot of people shop there because that's what you can afford, right? So
Yeah, exactly. So I do think that that segment in the UK, and quite a few of them are either privately owned or a whole separate company. I do think that there's quite a lot of expansion in that sector. So the discount sector has grown in the UK, I think in the last 7 years or so, from around 10% market share to around 20 now. So they're really putting a massive squeeze on the traditional retail. So
right.
that's probably a part of the retail that I would consider adding to my portfolio, because they do also reward the investors with a tasty dividend.
Uh, Technology. Let's just jump into another sector. I just happened to glance down and saw technology there, and we haven't talked about that yet. Anything exciting in technology for you?
Well, that's one of the problem with the UK market. We're not as
Tech
treated
savvy?
as you guys in North America with exciting tech companies. So we have a couple in our stock market, but there's not that many. And the ones we have, at least in like FTSE 100, there is one that's called Ocado, who are an online retailer, if you like. So they predominantly focus on the technology side rather than groceries. Um, but they're not really doing that great. So I think they've been on the market for the last 7, 8 years, at least publicly listed, and they haven't posted a single year of green yet. So if
That's
you
a tough
kind of,
sell.
yeah, exactly, and none of the, well, some of the tech companies in the UK, they do pay dividend, but it's very little. So the ones that come to mind have no dividend payments here at all, as well as the performance lately hasn't been that great. So I think people who bought it predominantly kind of before COVID started, there was probably a good chance to benefit. But I think that you guys have had similar thing, that all the tech companies have boomed massively after COVID, with everyone working from home and just splashing cash.
Yeah.
And then now they're kind of having a horrid time. So I have a couple of plays in my portfolio, but I don't really want to look at those numbers if I'm very honest.
Fair enough. Fair enough. Similar here in Canada, there's not very many tech stocks listed on the Toronto Stock Exchange. So, people that are looking to invest in that sector are definitely heading to the US markets, and obviously looking at, the big ones, Apple, Microsoft, and then you've got your whole like the social media ones too, Facebook and Amazon, Google. And I know not all of them are dividend payers, but that is obviously primarily where the tech sector is obviously Silicon Valley, USA. So yeah, very sounds very similar, Canadian and UK. I don't think I have any tech in my portfolio right now. So
Yeah, I have a couple. So mine's are kind of predominantly tech-based online retailers. So some clothing, I have Boohoo, I think, and Ocado. But the losses I currently have on those are not something I'm overly pleased about.
yeah, yeah, it's never fun looking at your portfolio when any particular stock is down, unless you're looking at it going, "Oh, I can dollar cost average down on this and buy more," if it's something that you're trying to, like, stack more shares of, right?
Yeah, that's probably an opportunity to kind of do a bit of that. My biggest concern is how massively overvalued they were at the time, and
Right.
where they currently sit. I just don't think it's wise enough to try to dollar cost on them.
Yeah.
If I'm very honest, I do think that putting my money into an index of some sorts can potentially be a wiser choice at this point.
Cool, cool. I meant to do this a lot earlier in this episode. This is your website/blog, and obviously I will put the link in the description, but yeah, if you just wanna talk through this.
Yeah. So thanks for sharing that. Appreciate it, Dave. Yeah, I've been blogging, as I said earlier, for a good 8 9 months now. So the website's there, and I'm kind of trying to share my my personal experience and my knowledge about different money-related topics. So there has been quite a lot that I've been kind of learning and discovering as I was living in the UK, and when I was speaking with a lot of my friends, many of them kind of didn't realize opportunities of like tax-free investment accounts, the things you can benefit with like credit cards and things like that, mortgages, all of that stuff. So I'm by no means a financial advisor, but I'm just sharing my personal kind of experience in all of this and how I've managed to get myself on the property ladder. How do I use my credit cards and the like? So yeah, trying to bring the good stuff to the world and hopefully get some people to kind of learn and benefit from it.
So 8 pages worth of blogs there. So, like I said, I'll have the link in the description. Definitely head over and check this out. When I was looking at this earlier, the number one thing I saw on here when I was clicking around is like right up at the top, dividend stocks. I'm like, yes.
Yeah, I do think that in the current environment, it's a great way for those who have some spare cash to actually make some more. So the uncertainty currently around the markets and investing in like growth is a bit tricky. Whereas I think dividends at the minute, and especially for us in the UK, we do have quite a few options here. And the FTSE 100 itself, I think, is offering around 3.7% as it stands at the minute. So you put your money there, and I don't think you can go massively wrong with it in the long run.
Right, right, right. So yeah, that's great. Lots of reading over there. Like I said, looks like 8 pages worth of blog posts. So definitely check that out. And I guess before we've been talking for well over 45 minutes now, and there's probably a few more things. You have anything left on anything else on your list?
The only other companies that I have some exposure is healthcare. So I know we touched on healthcare through REITs somewhat, but that's probably the only other sector that I have. And again, in the UK, we are quite fortunate to have at least three big companies come to mind. So there's GSK, there's Helion, which is the kind of consumer side of what used to be GSK, and then the AstraZeneca, which kind of focus a lot on vaccines and stuff. So all of these, again, in my personal view, offer really good uh, opportunities to invest in. And I think realistically, where healthcare is and with the aging population globally, as a long-term play, I don't think you can go really wrong there.
Right.
I think like there's other great companies globally, obviously the likes of J&J. So you can really find good opportunities there and kind of build yourself a safe investment in my head, because I don't see us becoming healthier as we age. So people will need paracetamols and stuff, but all of that kind of pays the dividend in the end to everyone willing to invest.
Yeah, so you mentioned AstraZeneca there and the vaccines, and obviously, through COVID, the companies providing those vaccines were obviously getting paid for them, so I'm sure they did quite well.
Yeah, I did have AstraZeneca actually in my portfolio during COVID when they've kind of benefited through it. So I remember buying them at I think £60 a share, and they're currently trading at 110. So it's near 100% growth on there. And on top of that, throughout the last 2 years, they probably paid another 15 to £20 in dividends. So if you think of it that way, it's a no-brainer. You could easily double your money just in a couple of years.
Right. Another quick question. Is your entire portfolio based in UK FTSE, or do you have any like US stocks or any other country?
So my current portfolio is predominantly based UK. The only US options I have is the indexes. So that's probably around 40% of my portfolio. So I have S&P 500 as well as Nasdaq. Um, Again, Nasdaq I probably bought not at the right time, but I do think that there's an opportunity there. So I'm kind of dollar averaging on that as it stands, because indexes in my head are a really long-term play, so kind of 10 years plus.
Right.
And I don't really see technology becoming less important 10 years from now. So I only see that segment bouncing back and again delivering some incredible growth. So that part of portfolio is obviously focusing on growth rather than dividends and here and now. But then the S&P kind of delivers a bit of both, and then the UK indexes themselves are a really good addition to the mix in my head by offering that healthier dividend. But I also think that there's quite a lot of potential for growth.
Yeah, interesting. So those like the Nasdaq and S&P 500, is that still through like the UK exchange through the FTSE, or do you have them actually held in a US account, or how does that
No,
work?
no. You can open quite a few accounts here where you can buy ETFs of these. So I do have an account with Vanguard, and obviously holding indexes with them is, as you'll probably know yourself and advertise massively, is one of the cheapest ways and probably the best way really to diversify your portfolio and kind of open yourself to a wider market.
Right.
So that's the way. That's kind of how I hold these. The only thing that for people kind of investing from abroad, and that's my kind of personal experience, you need to be quite careful with what happens with the exchange rate as well. So while the index itself might be 5% up from when you invested, your portfolio might be down based on the exchange difference. So currencies do play a role in it, but I think if we do invest kind of long term, that's probably not a bad shout to diversify through indexes.
Awesome. This has been a great conversation. Really enjoyed having you on as a guest on the Passive Income Podcast. Any final thoughts before we sign off?
No, I just want to say a big thank you to you, Dave, for inviting me, and it was great to have a chat and yeah, open my eyes to what's happening on the other side of the pond, as you say. It's always interesting to listen into these and interact with you on the likes of Twitter. So thank you for that, and yeah, I'm sure there's going to be more to come.
Yeah, for sure. So, and same, thank you so much for spending some of your time with me today, right in the middle of your Saturday for the time zone that you're in. So I really appreciate that. And again, link in the description below for Artur's website, and of course the link for buy investing shirts using code word Posse. And with that said, we're gonna call this an episode. And if you're still watching 50 some minutes later, you know the rules. Subscribe.